Okay, welcome back. So the market's looking pretty strong, 74 points higher as far as the Nifty goes. Let's put up the stock of Zensar Tech, and it's basically at a new high, all-time high. So 1434 was the last all-time high. With today's 6.5% pop, that takes us to 1461. So it's marching on, and it's been a pretty strong year as well, I think. For the year, that is year to date, the stock is up 64%. Well, that's quite something. We have the management of Zensar Tech joining us. Sandeep Kishore, Managing Director and CEO at the company, is with us here. Sandeep, thanks very much. Great to have you with us here. Thanks.
Thank you for having.
When you look at a 64% gain in the stock, I mean, how do you correlate that to the business, which is to the business environment, the business momentum really at Zensar?
So, Prashant, we've talked about this earlier as well, that we are focused into digital technology, and we're executing quite well. We announced our Q1 results, and 43% of our business now is digital. That part of the business has grown 40% year on year. It grew about 12.8% sequentially. So we are executing quite well to the strategy that we had articulated, that we are a return on digital platform plus services company rather than just a pure play services company. And we are winning, quite well. We won over $500 million worth of new deals in the last 12-15 months, and we are in the execute phase for that. So overall, it feels quite good.
Is are the margins you make on this 43% of the business, which is digital, higher than the rest of the business?
Currently, it's in the same level. Because digital programs are not at scale yet. They are between $5, $10, $15 million TCV range. The traditional programs are between $15 to $100 million TCV range. And there's a lot of upfront investments you have to do on site, which is closer to the customer. And that does take a little bit of an investment upfront. As you get into full scale implementation and large scale program, I do believe that the margin in digital will be higher than the traditional margin.
Globally, is that the case, that margins on digital business are higher, and that eventually you'll get there? Is that the... I mean, my question is, why should we be excited about 43% of the business for a company coming from digital, as opposed to traditional plain vanilla bread and butter IT services? I mean,
so as I said earlier, it is a platform plus services play. It's no longer a pure play services play. So if it is platform, the margins on the platform that you build, at Zensar we build return on digital, which is our own homegrown platform, which about 3 quarters ago we launched it to our customers. The margins on that are significantly higher than the traditional services margin. And as that starts to scale, you will see a margin play come in as well.
Okay. There are analysts who are expecting, say, a dollar revenue growth of 18.9%, inclusive of all of your acquisitions in FY19. Are you on track to, say, achieve so much?
So we don't give any forward guidance. What I have said earlier is we will for sure beat NASSCOM guidance. We've done quite well. 18.1% is what we delivered growth last quarter on dollar term here. So we are doing quite well in executing to the strategy that we have articulated.
Okay, what about organic growth? Say X of all of your acquisitions, you're just talking about your base business. How is that doing currently?
So Q1, Ekta, we did about 14.5% organic, core organic business year on year on constant currency, about 3% sequential core organic, also on the baseline of the business itself. So even the core organic business for us is actually doing quite well, and we're very happy with the way we are executing it.
So how much do you think you can, I know you can't give guidance per se, but are you going to be, say, in double-digit growth? If you're talking about double-digit, is it going to be mid-teens? Is it going to be early teens? How is it looking for you?
No guidance, but certainly double-digit. Absolutely, yes.
Okay. The other thing that I wanted to ask you is that you've concluded 4 acquisitions, I think, in the past 3 years. You're very active within that space, and I think majority of it is focused on the digital space. What more are we expecting in terms of acquisitions? How much cash do you have on books as well?
So we are an acquisitive company. In the new phase of Zensar, when we started the transformation about 2.5 years ago, we said that we are going to be focused on tuck-in acquisitions, which are between $25 and $75 million enterprise value. We've concluded 4 in the last 21-22 months, and we are continuously looking. We are still an acquisitive company. We have raised some debt as well, and the acquisitions are being funded through the internal accruals as well as debt. And we have $70+ million of cash available with us to do more acquisitions as well.
Has the IMS business turned profitable?
Yes, it has. Absolutely, yes. We actually now call it CIS, which is Cloud and Infrastructure Services.
Okay.
And we've done quite well last quarter, actually 13% sequential growth on the core CIS business. The customers are moving to cloud, and that provides a huge opportunity in the next generation of cloud infrastructure services. It's about cloud orchestration, provisioning, onboarding, security, a lot of modernization of the application stack itself, plus the AI-led automation tool that we have built, which we call Vinci, is doing quite well into the new next generation of customer data center environment, security environment, storage environment here. So it helps our customers be far more effective when they launch their product into the marketplace.
Okay. All right, Sandeep, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Zensar. In fact, the stock is up around 6.3%. Fresh high for that stock. Zensar currently at around 1,460 rupees. Need to take a break now, but more on the markets once we're back. Stay tuned.